This conference will now be recorded.
Good evening, everyone. I am Pete Panito, First Northern Credit Union's Business Development Contact. We have Director of Sales, David Tagnarelli, presenting today's webinar, Planning for Money Milestones. Everyone should have received the handout that was emailed earlier today. Let me know in the chat box if you don't have it, and I will re-email it to you. This presentation is part of our weekly financial wellness series in partnership with the City of Evanston. We will follow up with an email tomorrow with additional materials that will be presented today. Throughout the webinar, if you have any questions, please ask them in the chat box, and David will address them at the end of the presentation. We appreciate you joining us today, and with that, I turn the microphone over to Mr. Tagnarelli. It's all yours, David.
Great. Thank you, everyone, for joining us tonight for our webinar on planning for money milestones. And thank you to the City of Evanston for investing in the financial wellness of your residents and those who work and play in Evanston. We're so proud to be the financial wellness partner, and we hope that you find some value in tonight's presentation. So we all experience different money milestones throughout our lives, whether we're just starting out and managing our finances or we're preparing for retirement. No matter what money milestone you are or will be experiencing, planning for those events is important because it provides a specific direction to follow, puts you in control, and enables you to be proactive. Without planning, many aspects of our lives would not fall into place the way we want them to. Planning helps to determine the steps necessary to achieve a particular goal and makes it possible to achieve that goal. But how do we know what steps we need to take? The first step in planning for money milestones is to determine what our financial goals should be. Let's talk a little bit about SMART goals. Identify specific goals. So goals are important to all budgets. Setting goals helps you achieve what you want in the future. To improve the odds that you will achieve your financial dreams, your goals should be SMART. So the acronym here stands for specific, measurable, attainable, relevant, and time-bound. Let's break those down a little bit. Specific. So set a specific goal by answering the W questions. Who, what, why, where, and when. Think about what you really want from your money. Would you like to repay debt, buy a new car, or take a long-awaited backpacking trip with friends? These are strong goals because they are specific. Planning to save $1 million for retirement by age 60 is a specific goal. But wanting to be rich is just a wish. Next is measurable. So establish criteria for meeting your goal by answering the H questions. How much? How many? And how will I know I've met the goal? You should be able to break the price down into amounts that you can regularly deposit so that you can monitor growth and track progress. For example, suppose you have a goal of taking your backpacking trip 1 year from today. After researching the best deal, you determine that it will cost you $2,000. Attainable. So determine the attitude and skills that you need to reach your goal. Strive to keep your goals reasonable and reachable. Too modest a goal, and you may not have the desire to follow through. But if it's too big a goal, you may eventually become too discouraged to keep going. So for the backpacking trip example, is it a reasonable goal? Next is relevant. So make sure that your goals are important to you and align with your values. Think about the short-term and long-term objectives behind the goal and whether this goal will achieve the objective. In our example, is backpacking an activity that just sounds like a good idea, or do you truly enjoy it? What are its potential benefits to you personally? And finally, time-bound. Set a time frame for your goal to create a sense of urgency. Okay, let's talk about mapping out your financial future. So here we're looking at short-term goals, which are defined as under 1 year, medium-term or mid-term goals, which can be achieved in 1 to 5 years, and long-term goals, which can be achieved in over 5 years. So back to our example, you want to take a backpacking trip in 12 months. The trip will cost $2,000, and you have already saved $200. So you can determine that you need to save $150 every month to achieve your goal. The math here is 2,000 divided by 200, that equals 1,800, and 1,800 divided by 12 months to save the goal is $150 a month. Here's another example. Suppose you would like to save $10,000 in 10 years. To achieve that goal with no investment earnings, you would need to set aside $84 every month. However, with this long of a goal, you may be able to count on investment earnings of an average return of 7%. With this, you would only have to save approximately $58 each month. And if you adjust for the inflation rate of 1.6%, then it goes up to approximately $69 each month. So here's a few more examples. One is establishing an emergency savings account within 1 year, and you need $1,800 to achieve it. A $150 a month deposit gets you there. The next is a medium-term goal of repaying debt. $5,000 of debt to be repaid over 3 years. $200 in monthly debt payments gets you paid off. And finally, to fund retirement in 30 years with a goal of $1 million, $350 deposited each month will get you to your goal. So if you add each of the goals up, short-term, medium-term, and long-term goals, all being worked on simultaneously, your total monthly savings for all goals is $700. Okay, so being organized is essential to efficient money management. If all of your information and paperwork is in order and accessible, you'll never have to waste time searching for important documents, wondering about your account balances, or missing bill payment deadlines. Let's talk about your physical space. Set up an area in your home where you can conduct all of your personal financial business. Even if you conduct most of your financial transactions electronically, you'll need to properly store and dispose of physical documents. So set up the right space in your home with tools that may include a file cabinet to file away receipts, warranties, tax returns and supporting documents, paid bills, account statements, so that you can quickly access these items if you need them. Next would be a shredder. To guard against identity theft, invest in a shredder, preferably one with the crosscut feature, and use it to destroy all personal and financial documents before you discard them. Some examples of specific items that you should shred include ATM receipts, account statements, canceled and voided checks, credit reports, employment pay stubs and records, expired passports and visas, expired credit, debit, and ATM cards, and pre-approved credit card applications. The next item for a home office to keep in mind is a fireproof safe. So in your box or firebox, you should keep insurance policy documents, deeds and titles for your home, car, and other real property, estate planning documents such as your will and power of attorney, the key to your safe deposit box if you have one, your birth certificate, passport, marriage certificate, and social security card. Many will ask, how long should documents be saved? Here's some good guidelines. You can toss receipts from minor purchases after you've checked them against your monthly account statement from your financial institution. You should save receipts for major purchases as long as you have the item. And then save receipts for tax-deductible items in time to file your tax return. Utility bills, credit card bills, checking and savings account statements should be saved for 1 year. Monthly and quarterly investment account statements can be saved until the year-end statement is received. Then keep your year-end statements until the investment is sold. Loan documents and statements should be saved until the loan is paid off. Then save the last statement to show that the loan was paid permanently. Tax returns, W-2s, 1099s, and any other related tax documents should be saved for 7 years. Insurance policies and estate planning documents can be saved as long as they are in effect. Titles to property should be saved as long as you own the property. And finally, your birth certificate, medical records, social security card, and marriage certificate should be saved permanently. A next way to stay organized is to create a personal financial directory. A financial directory that lists all of your account information makes it easier for someone to cancel your accounts or otherwise manage your finances if you're not able to. It can also come in handy, for example, if you lose your wallet or forget a password. So think about all of your accounts and obligations, including loans, credit cards, utility bills, checking and savings accounts, investments, mortgage or rent, retirement funds, and insurance. For each item, track the account number, who it is with, contact information for the company, your online username and password, location of statements, and monthly payment and due date. In addition, include the name and contact information for any financial advisors, such as an accountant or insurance agent. Then store the list in your fireproof box and share the location with a trusted friend or relative. Periodically revisit the list and keep it up to date. The more incoming paperwork you have, the harder it is to keep straight. So signing up for online statements is a great way to simplify your system. Using online statements also cuts down on the number of paper bills that can get lost in the mail or in a pile of paperwork and reduces your vulnerability to identity theft. You should also consider scanning important documents, such as titles and receipts for high-cost items, so you have a backup in case the original documents are destroyed or lost. Next, managing your credit card payments. Most credit cards will give you the option of setting up automatic monthly payments electronically rather than sending in a payment by mail. When setting up automatic payments, you'll be given choices as to how much you want to deduct from your bank account every month. Those choices may include the minimum payment, your statement balance, your full balance, or some other amount that you set. In many ways, automatic payments require less management than manually paying your balances. You don't have to worry about forgetting a payment on time or keep track of multiple paper statements if you have more than one credit card. And plus, you'll avoid late charges. However, you do need to monitor your bank account to make sure that you have enough funds in the account before the payment comes out. So let's talk a little bit about tracking your spending. So many financial problems, such as not being able to pay bills, having credit card debt, and not being able to save, can stem from not following the golden rule of money management, which is spending less than you earn. So where do you stand? An accurate budget depends on first being highly aware of every purchase you make. So here's a few good methods that you can use to track your spending. As you first begin the process, try to spend as you normally would to become more aware of your habits. You can then make adjustments based on your discoveries. One method is to write everything down. Record your purchases using the weekly and monthly tracking worksheets in the handout that was provided, or perhaps in a small notebook, or even on your mobile device. Make sure that you note the date, item, and cost of each expense. Adding up your spending at the end of each day and week, and then after several weeks of doing this, you'll have a good idea of where and how you spend your money. Another method to track your spending is to keep all of your receipts. Obtain and keep receipts for all of your purchases, and then tally them at the end of each day. A third method is to stick to plastic. So simply using your debit or credit cards and referring to the statements your financial institutions provides can give you an automatic handy electronic copy. You can also check your account activity online. This will only work if you never use cash. If you do, be sure to record it separately. Finally, you could use budgeting software. So budgeting software, you'll need to input the information that you have collected. Some programs can even link to your checking and credit card statements and automatically report your purchases. And First Northern does have an option of budgeting software included in our free online and mobile banking. So let's talk a little bit about some apps that are available. Apps can be a very helpful way to manage your finances electronically. Please note that these are just examples and we're not necessarily endorsing any one particular app. When choosing an app, pay close attention to ensure that you're aware which services are free and which services you may be charged for. The first is Mint.com. Mint offers two useful apps for managing your spending and learning how to budget effectively. The first, Mint, is essentially a consolidated version of their website. You create an account and input your information, and then Mint will pull the data from all of your bank accounts, credit cards, and investment accounts to provide you with a personalized, comprehensive financial portfolio. The second app, Mint Bills, will track the due dates for your credit cards and your statement balances. You can arrange for the app to send you reminders of when your bill is due as an additional checkpoint. Many banks and financial institutions also have their own apps, like First Northern with our online and mobile banking. So these apps will give you the option to complete transactions from your mobile device. When you sign into your bank or credit union's app, you can easily check the balance on your accounts, review your monthly statements, and access information you need to allow payments from your account. You could also send money to recipients by inputting their mobile number or email address linked to their bank account. A common and very useful feature of mobile bank apps is the ability to deposit checks directly through the app. You simply take a picture of the front and back of your check and instantly deposit checks into your account. Another great app, through Digit, provides automatic saving. So this is a free app for people who would like a digital assistant to help manage your saving habits. Not only does Digit analyze your spending, similar to Mint, but it can also be programmed to periodically transfer a small amount of money from your checking account to your savings account. Wallaby has a great app that can provide credit card analysis. So if you have multiple credit cards to manage, Wallaby could be effective for you. Not only does it track spending from all your cards, but it also factors in your card's rewards programs, telling you which card would be most advantageous for each transaction. Then there's also portfolio management apps available through Personal Capital and Acorns. So most brokerage companies will also have their own apps to make investing and managing portfolios with them very simple. You may find it useful to complement to Mint's budgeting functionality through these investment apps. Okay, let's talk a little bit about building your budget. So what does an effective budget look like? Remember that a budget is nothing more than a spending and savings plan. You can create it with a pen and paper using the essential and discretionary expenses worksheet in the handout. You could also use a spreadsheet or with one of the apps that we talked about. Whatever shape it takes, your personal budget should include your income, your expenses, and your action items. So let's talk a little bit about what needs to be done with the worksheets in order to address key budgeting issues. So first, you want to list and total your monthly net income. So always beginning with your income will determine what you can afford to spend and save each month. Then don't forget the primary rule of budgeting, which is that expenses should never exceed your income. When completing the monthly income worksheet in the handout, you want to make sure that you avoid overestimating your income. If you work overtime hours, include the extra income only if you're absolutely sure that it will be consistent and continue into the long-term future. It's always best to use conservative figures for your income. You may not be able to work these hours in the future, and you want to make sure that you account for everything that's guaranteed. Bonuses could also be problematic when estimating your income for the purposes of a budget, so only include them, again, if they are guaranteed. If you work part-time, are self-employed, or your income fluctuates, you may have some challenges estimating your income exactly. In this case, it's best to use the previous year's income as a base and estimate whether you think you'll be able to earn more or less in the coming year. Again, try to be conservative. It's better to have money left over than to be unable to pay your expenses at the end of each period. When using the income spreadsheet or worksheet in the handout, you should list both your gross or pre-tax and pre-deduction and net or post-tax and post-deduction income. If you receive a large tax refund, you may want to increase the exemptions that you claim on your IRS forms. Make sure to consult with a tax advisor before making these choices. If you do so, this could reduce the amount of money taken out of each paycheck for your taxes and increase your net income. It's better to have the extra money throughout the year and put it in a savings and or paid on your debt than to wait until you file your return to get the cash. However, you do not want to increase your exemption so much that you wind up owing money come tax time. There is an IRS withholding calculator located at irs.gov/individuals and can be a helpful tool to determine the proper number of exemptions you should claim. Second, you want to list and total your monthly net expenses. So when determining your expenses, you should have two columns to work with. One for what you have been spending your money on, and the other for what you propose to spend it on in the future. Evaluate your cash flow by listing all of your expenses in the current column. Make sure that you include everything. Many well-intentioned plans are sidetracked by not accounting for the unexpected expenses like car repairs or unexpected medical bills. A workable budget makes room for the financial outlays that arise in the future throughout the year. Of course, there are those truly unexpected expenses that you simply cannot plan for. And therefore, an emergency account should always be part of your budget. Now, some essential expenses will be fixed, meaning the same amount every month. This might include your rent or housing payment, while others may be a variable expense. These might include your gas, electric bill, which could be more or less expensive based on the season. For those bills that fluctuate, determine an average by totaling what it typically costs for the year, then divide that by 12 months. Most gas and electric companies will also offer their own budget plan to help you keep those expenses fixed for the year. Discretionary expenses are those that if you had to, you could live without. This is not to say they aren't important, because they make fun life and interesting. They make life fun and interesting. However, they will probably be your focal point when determining where to make cuts. Reducing non-essential expenses could be the very answer you need to repay your debt, live within your means, and save for a more important goal in the future. So once you've listed and totaled your income and expenses, subtract your current expenses from your current income. If you find that there is more going out than is coming in, don't panic. Very often, this means that you're charging what you cannot afford to pay for with cash each month. This realization may be the very call to action that you need to make positive budgetary changes. Okay, start saving now if you can. So why do today what you can do tomorrow? Because waiting to save money until after you've paid all your bills almost guarantees that you'll put nothing aside. With money in a wallet or checking account, the urge to spend it often surpasses that desire to save it. However, by beginning with saving each month, depositing money into a savings account before other bills are paid, you can defeat that urge to postpone this very important task. A general rule of thumb is that you should set aside 10% of your monthly net income. That amount of savings will earn interest, which will then be added to your original amount of savings. The sum you will earn interest the following year, the sum, and so on and so forth. This is called compounded interest. So the sooner you start, the greater the benefit you'll receive from the compounded interest. So here's an example. Suppose you have a savings account at age 35 and start saving $25 a month. This account may earn an interest rate in this example of 7%. How much money will be in the account by the time you reach age 65? Your total contribution will be $9,000, but by age 65, you'll have saved $30,480. Now, let's suppose that you start saving just $25 a month at age 25 instead of age 35. In this example, you'll only have increased your contribution to $12,000, but you'll have saved more than twice as much, $65,608. So if you're able to save more than $25 a month at any point, these results could be even more dramatic. So when you build your budget, you should be putting a fixed savings amount into your essential expenses. Why? Because your dreams, your goals, those important things we talked about at the future should take on as much importance as to your budget as other necessary expenses. An emergency savings account, so crucial. So establishing and maintaining an emergency savings account is key to any sound financial plan. Having money in a liquid account, meaning one that you can access quickly without tax or penalties, will prevent you from turning to credit cards or friends and family in times of a financial crisis. A good rule of thumb is having 3 to 6 times the amount of your essential living expenses readily available in one of those accounts. And we're going to talk a little bit about a website with many great financial tools that has a calculator to help you determine exactly how much to have in one of these emergency savings accounts. So let's put an example out there. Suppose that you have determined your total monthly living expenses are $2,400. These expenses include non-essential expenses like dining out, gifts, and gym membership. However, your essential living expenses, rent or mortgage, basic food needs, gas, utilities, cable and internet access, etc., only run you $1,500 a month. In this example, an appropriate emergency savings account would be at least $4,500, or $1,500 of those essential living expenses times 3. So lots of people ask, what should I do first? Save for my goals or repay debt? So the best approach is to try to do both at once. If you have debt that you would like to eliminate, you may wonder, again, what should I do? Address the debt or put money aside for other financial goals? Having an emergency fund will help you avoid using credit for unexpected expenses. And by starting the fund now, even if all you can manage to save is $10 a month, you're getting a jump start on establishing healthy money management habits. You may want to put less vital goals, such as a vacation or a new smartphone, on hold while you concentrate on repaying credit card and unsecured loan obligations. In most cases, the interest charged on consumer debt is much higher than the interest earned on savings vehicles. Saving for retirement is also a very important thing to do, even while repaying debt. Employer-sponsored retirement plans, such as 401k or 403bs, have many advantages that can help you maximize your dollars both in the present and in the future. If you do not contribute, you may be missing out on benefits like reducing your taxable income and letting pre-tax dollars collect interest. And because many employers match contributions up to a certain percentage, you'll lose out on free savings by not taking advantage of this type of plan. Okay, let's talk a little bit about the cost of credit. So here we're going to illustrate the cost of credit at both 15 and 18%, and how much it costs to pay them back at different monthly minimum payments. So let's say we have a balance of $5,000 on credit cards, and the interest rate is 15%. If you make a minimum payment each month of $100, you'll have paid $7,902 over 6 years and 7 months. So over $2,900 more than you spent on the credit card. Now, if you can increase that minimum payment to $150 each month, that monthly payment, now you're down to only $6,512 that you've paid off in 3 years and 8 months. So not only have you cut the payoff time almost in half, you've saved over $1,400 or nearly $1,400 on those payments. Okay, let's talk about this same example at 18% with a $100 monthly payment. Now we're up to 7 years and 10 months, and you're up to $4,324 in interest beyond the original $5,000 spent. Increase that monthly payment to $150, and you've cut it back to $6,989 and shorten the time period to 3 years and 11 months. So these examples are a great illustration of how just paying a little bit extra each month towards those credit card debts can help you save a lot of money over a relatively short period of time. Okay, so how do we take the next steps? Try to stay motivated. You can stay motivated and stick to your budget by using the following techniques. Visualize success. Picture yourself where you want to be financially, or tape a photo of your goals to your computer or your refrigerator. Next, stay organized. Pay your bills on time. Set up an area in your home for money management, and have your budget on hand to refer to it often. Third, be realistic. Recognize that you won't achieve your goals overnight, and that changing habits takes commitment over time. Next, you should monitor your progress. So enjoy the process of watching your dollars grow. Marvel at your savings account each month. It's a real achievement, and you should celebrate it. And you have to be realistic. Expect setbacks because they will happen. By knowing that they will eventually occur, you'll be prepared, and you won't be tempted to abandon your dreams. Reward yourself along the way. This is so important. Your hard work deserves recognition from the most important person, and that's you. Then keep the plan going. Decide now what specific tasks you'll need to complete to achieve your goals. And then think, what can I do today? What can I do in the next 3 months? And what can I do this year? Mark your calendar with the proposed milestones and celebrate them when they come up. A well-developed budget is your springboard to financial independence. It will help you clarify your objectives, organize your finances, refine spending, and inch you closer to your dreams. Success does take time though, but by starting now, you'll be that much closer tomorrow. Okay, so free tools and resources. So if you visit evanston.balancepro.org, so just in Evanston right there before the website listed, there's a lot of great resources. Those include articles, calculators, videos, podcasts, e-modules for self-learning, and then also free counseling services available through the site. Those services include money management counseling, debt repayment options, credit report review, and more. So check it all out at evanston.balancepro.org. And that includes tonight's presentation on planning for money milestones.
Okay, David, I have a couple questions, just 2 questions it looks like. Did you say First Northern has an online budgeting software?
We do. Through our free online and mobile banking apps, we offer a personal financial money management tool that includes many great budgeting layers to it. So be sure to check those out by becoming a member. It's free to join. Mention that you attended one of our webinars, and we'll be happy to cover the opening deposit for you. And then once you've logged into your online or mobile banking, the personal financial money management tool will have those budgeting software tools available to you.
Okay, and there are 2 questions, but I'm going to combine them because they're saying the same thing. 1%, saving 6 months of essential living expenses seems impossible. Is there a certain expense that always seems to be the easiest to cut back on? And do you guys sit down, First Northern, does First Northern sit down with people to go over a budget?
Absolutely. So please feel free to visit our office on Sherman Avenue by the CVS in downtown Evanston. We'll be happy to sit down with you free of charge and review a current budget or a proposed budget. It may seem insurmountable, but starting somewhere is the best place to go. And those expenses that can be easily cut back on, it's going to be different for everyone. Some obvious options that everyone's heard is, making your own coffee as opposed to buying coffee from a coffee shop every day, bringing your own lunch to work as opposed to buying lunch out. One great way that I've found to save money is planning out your meal plan for the week, your menu items, and then only buying those items when you visit the grocery store.
Okay, perfect. And that's it, David. And so that was the last question. So I want to thank everybody for joining us today. We always hope to walk away with a little bit more knowledge on the subject that we present. And we hope at the very least that you are reminded of some basics that you already know. We will follow up tomorrow with the PowerPoint presented today. And please email any questions that you may have. And I will let David have the final word, but I just want to wish everybody the best of health, wealth, and positivity. And thank you. Have a great rest of the week. And David, I'll let you have final word.
Sorry about that. I was on mute. I want to echo what Pete said. Everyone, happy health. Stay smiling, stay positive. We hope that you can join us for future webinars. Next week, we'll be talking about raising a money smart kid, and we'll start again at 5:30 on Wednesday. Enjoy the summer, get out, enjoy the weather, practice good social distancing, wash your hands, and we hope to see you next week. Otherwise, have a great night.
Thank you, everyone.